What's up, guys? It's November 19th, 2024. I'm just under two trading weeks. What is it? The rest of this week and next week until November's over, and we're right into December. We had a nice bull trend today, and I noticed a few things that I wanted to talk about. I just kept asking myself, why did this price action, whoa, why did this price action happen yesterday, but this price action happened today? And what I'm talking about specifically is what the heck? My computer's lagging. We touched here and we rallied. We touched here and we went sideways to the point where the EMA acted as resistance. And I'm bringing this up because that just confused the heck out of me. How could the EMA act as resistance in a bull trend? But I've been thinking about it and I have the answer. Possibly. Let's talk about the daily. Again, we had a more than 4 bar micro channel, 50% pullback, bouncing off the EMA. But this is a buy signal. And now that we're getting follow through, it makes it interesting. We had an outside day, which is also cool. Bulls are going to want 1-to-1. Again, bears are going to see this as a pullback. What am I doing? I am doing a breakdown. I was doing some back testing. So bulls want 1-to-1, which takes us to the top of the range, 1.5 R. Puts us at 6,100. That's a good number. Now let's get the bear picture. My computer, that's so crazy. What happened? And you know what's crazy about it is because today I turned it on and it didn't turn on. I had to like push the on button. So that kind of, now I'm getting a little nervous. It didn't lag while I was trading though. Bears will see this as a leg one, leg two. What will bears see this? Bears will see this as a pullback. But the leg two met the minimum objective. We went one tick below the strong bear bar here. So we went one tick below and immediately reversed. What are we testing? What are we testing? Everything's a test. Every breakout is some sort of test on a different time frame. Wow, my computer's lagging. This is weird. Okay, so we never even reached the high of this bar. This is a good breakout signal because it's a bull bar followed by a bull breakout. What is a bad breakout signal? Well, it would be, I think we had one yesterday. Bar 27 is a bad breakout signal for the bears because it's a bull bar followed by a bear breakout, and usually those get retested. That retest happened today on bar 37. But let's talk about something here. Yesterday's price action. You can even argue it was better. The previous day on Friday, we had a broad bull channel that broke out, and then we rallied, and then we went sideways. But today we had a big gap down, rallied, and then kept rallying all the way to the end of the day, and we still closed. We'll still close above the EMA. So even if you bought here, you could buy more, and you get out for a few points profit or a break even. So why did this rally not continue? Well, the very simple answer is look left. This is a bear trend. This is a gap down. This is a sell-off with a gap down and a bear trend. There's no confidence. That's not price action. That's not a price action answer, but let me get through it. When we're looking left, the bulls and the bears are seeing this downtrend. So they're like, how is this a pullback or is this a trend? Is this a pullback or is this a trend? Is this a pullback or is it a trend? We're in bearish territory. But now look at today's price action. We gapped that because now we have a big down, big up. Big gap down, and then bar 5 is testing bar 54's low. So if we're not in a bear trend, look, one tick, failed breakout. If we're not in a bear trend, the best the bulls can do is get a range. And we're not in a bear trend because look at if we are in a bear trend, well, the first 3 bars are bull microchannel and bears are getting bad follow through. Bulls are buying bear bars far below the EMA. So this could already tell you we might be in a range. But then we take away, so let's pretend we don't see this. And now we're just looking at this price action. So we see this day and let me see something here. And this is all we see. I wish there was a better way to do this. If you guys have a better way to hide the price action, let me know. So you see, let me see if I can do this right. So now we're looking at a bull rally that tested the bottom of the range, bar 54, and we start to rally. And then look at these bars are cleaner because we're buying into this below every bull bar is support, above every bear bar is resistance. Bulls are buying into resistance on this day, on Monday. Whereas here, bulls are buying while looking left. It's a rally. They're more confident. The gaps, the bars are nicer. The follow through is better. The bear bars are. See, I was also comparing the bear bars, and these bear bars are shallow. There's more tails, but they're at the end of the day, there's more bear bars. 1, 2, 3, 4, 5. Maybe not that one. So 4, 5. Count this one. There's 5. From around the same price. So the high of we could say the high of bar 7. We've had one bear bar. So today's rally had more strength, and I think the bulls had more confidence. That's not a price action answer again, but that's the best way I can describe what I'm trying to explain. Is that they look left and saw a bull trend. Here, they look left and saw a bear trend. This, they're buying in a range, which is, today's play was also a range play. But we broke out of the high, and we tested Friday's high. Well, we went above Friday's high. We had an outside bar. 1 second. So you guys can start to see how today's rally got continuation at the EMA versus yesterday's rally didn't, because I didn't get slaughtered, but I also gave up pretty much all my profits because I got trapped here, and I just assumed, yeah, we're gonna test and at least retest the highs. That never happened, and I just was like, wow, what the heck? And I just could not grasp what happened. But now we're looking left. It's like it makes a little more sense. At least it does to me. Let me know if you guys agree or disagree, or if I just missed the ball on that. Yeah, let's get into the price action. Kind of spent some time on that, but again, today was a rally, so it'll be a little bit easier to talk about. Big gap down. And what's the context of the gap down? Well, we have to look at the overnight session. Leg 1, pull back. Leg 2, D, pull back. Leg 3, and just eyeballing it. I'm not. Fuck it. We're gonna excuse my language, but I'm allowed to swear. 24 points, 40-ish points, 38. That's the high, but we'll just do it from this. 50. Okay, so now we have 3 legs lower. So what does that mean? Wedge bottom, and the last leg is climactic. It's climactic in relation to the previous 2 legs. This bar, before we get the 3rd leg, this is climactic in relation to that leg. We get a deeper pullback. We're testing the bar 39-ish. Breakdown right here. You could say right here. It's climactic. So if you're asking yourself, why didn't the downtrend get continuation? There's your answer. We had 3 legs lower in a trading range, which is the wedge, with the last leg being climactic. Very climactic. I was actually watching this, getting out. My head was sizzling because I was like, are you kidding me? Why the heck are we getting a trend in the overnight session? Doesn't matter. We got the bull trend. So, wow. 30 point gap down is not that big. But the context is we've had 3 legs lower with the bottom of the trading range, and there's a bear wedge. There's a wedge in this gap down. First 3 bars are a bull micro channel, so that's not good if you're in a bear, right? The first bar should be bearish with some continuation and weak bull bars. Look at the tails on the bull bars. This is already telling you that bulls are willing to buy, because as soon as it sold off, bulls bought, sold off, bulls bought. Bar 3, strong bear bar, strong enough to get its own second leg. I saw that, but didn't take it because when we have, what do we have? We have, forget yesterday's price action. We have a micro channel down here, and then we have a rally here. So the best right now we got is a range, and I think these 3 bull bars are strong enough to get its own second leg. Bar 4 strong to get a second leg. What's the minimum requirement for a second leg? Is 1 tick below the prior leg. So that objective was met with bar 5, and it rallied. Again, this is a bear bar closing with bullish price action. I bought the close here, and I got out before it turned red on bar 9, and then I got bought again on bar 11. I scalped out here, and then I bought the bear bar 17. I scalped out resistance. And then I bought this bear bar, and I scalped out on the high of 36. I took 4 trades, right? 1, 2, 3, 4. Yeah. I missed this last leg because I was looking at it from a wedge top. And 50% of wedges breakouts of triangles, so wedge top is a triangle. 50% of triangles fail. I was looking at the previous swing high, which was yesterday, bar 27. I was thinking, well, this could fail because I'm trying to really wrap my head around trading probabilities. The probabilities for this getting a second leg is good. Probabilities for this getting a second leg is good. Probabilities for this getting a second leg at the previous swing high, it worked out. You could catch this leg, but it also failed. We have to scalp out. That was the final leg. The bars look great. And then we go sideways for the rest of the day. So again, 3 bars, pull back. I think this is trying to get its own second leg. Bar 4 got its second leg with bar 5. And we rally. Lots of overlap. I don't blame you if you don't buy this. But once you get the breakout bar 12, you should only be looking to buy. Bar 12 is a strong bar closing above its high. Bar 14 is good follow through. And finally, bar 13 is good follow through. And finally, bar 14 is a bull bar closing just above its high, but it's a full bull bar over the body or over the EMA. 15, 16, great follow through. 17 is the first reversal after 1, 2, 3, 4, 5, 6, 7 bar micro channel. Something that really helps me be patient is the more bars we get in one direction, the bigger chance there is for a pullback. And I was itching to get in, but my system is telling me wait for a micro channel, then you get in on the pullback, and then that's the trade. I made coffee and it's already cold. Again, in trending environments, if we have gaps open, I am willing to. You could also argue we're in a range because of the gap down. So big down, big up, strange bound. But I was looking more at the breakout here, getting follow through. If we have gaps open, I'm willing to buy highs. If we have gaps closing, I'm looking for deep pullbacks. We had 2 gaps open with great follow through, 7 bar micro channel. I bought the bear bar, it being its first pullback. First pullbacks typically fail. They were testing the gap, and we rallied again for 1, 2, 3, 4, 5, 6, 7, 8. 8 bars. So I did the same thing here. Bar 30, 29. However, leg 1, pullback, leg 2. So the pullback was deeper, and I didn't account for this being the second leg. I thought this was strong enough to get its own second leg, so I was eager to buy. Ultimately, I got out here, so I made a point anyways. It kept going in my favor, but the premise was we go up from here, so I got out and just kind of meandered because I saw this go like this, and then I saw 47. I was like, I don't know, and then saw this, felt the FOMO, but then I saw 58, and I was like, you know what? That's gonna get its own second leg. 59 is a pullback. Here's 58's second leg. Now it's definitely not my environment. This is big up, big down. We're trading at the swing highs. Why does that happen? We're trading at the swing highs from yesterday, bar 27. So bar 27 got tested and they broke out 37. Yeah, we went sideways after that. Still, you could have bought the lows, you could have bought the EMA, made a few points. You buy 64, make about 15 points, not the best. So let's just get into the trades right away. Pushing that. So 3 bar micro channel here, put it below the pullback. That's met with bar 12. Even though I bought this bar, this was still my target, so I didn't want to change it. And then I saw the rally. I didn't want to get too greedy because whenever I ask for too much, that's when all hell breaks loose. So yeah, I got out because this bar was looking climactic around the previous swing high here, bar 80, 81, this price action. So I got out, rally for a little bit longer, and then I got back in on the pullback. I was looking for a quick buy because I was buying on the higher time frame EMA, but we went more sideways. 2 bar micro channel, I think is strong to get its own second leg. That's 6 bars on the lower time frame chart. Put it at the pullback, 1.5 bars met. Doesn't look like there's many trades today, but there are. You know, you could buy any of these bull bars. You buy bar 12, go for 1-to-1, go for 1.2. We have the opening range here. You can go for 2R and that's met. I'm going to delete some of this. So that's met. You could also buy here and look for the gap close with that much bullish price action. Try not to do that as much. I want to get a little more systematic with my exits. My exits are my weak spot. I've been looking over my trades. It's the weak spot. Here, okay, this is the final rally. You buy the low here, you get your 1-to-1, 1.5 hours not met. I think the probability is definitely good. We go higher, but I think you got to scalp too because it's climactic. You're for sure in the third leg, and if you can't count the leg, you know you're past the second leg. Second leg is the highest probable trade you're ever gonna find. The reason it's the highest probable trade is because there's 3 types of traders. There's the first traders that bought bar 12. What is going on with this? So there's three types of traders that are looking for a second leg. The first type of trader is the trader who front run the breakout, and now they're in profits. They want to press their position. Typically, when people front run their breakouts, they use a small position. They're looking to add to their winner. We all do that. Second type of trader is the bulls who had is the bears who had a limit order here, and now they're trapped. Now they have to buy back shorts, so they're waiting for a pullback to add to their shorts and get out 50%. In this particular case, they never got their 50%, so that added, they had to just buy back shorts, and they helped the bulls out. The third trader, that's us. We're the ones who wait for the micro channel, wait for the pullback, and get in on the highest probable setup because we understand the context of the first two traders. So yeah, that's the breakdown for today, guys. Hope that helped. I know we had a little bit, but today I really want to build these around more context, micro channels, trade entries, and just more action, something that you guys can take away and start using next week. Again, I'm not here to predict the markets. I'm just here to trade what I see, and that's why I wait for the micro channel. That's why I wait for the pullback. We can draw in a couple more gaps here. I hope you guys are doing good. I hope you guys banked on today. Let me know how you guys did. I really do enjoy hearing from you guys, so I appreciate if you guys leave comments. Thank you for that. Sometimes I feel like I'm in an echo chamber. But at the end of the day, from a very selfish perspective, I do this so I can study price action. And I hope you guys have your own form of breakdowns. Don't have to make videos, or make videos and don't post them, or you do slides or something. But you got to have some system for studying. Yeah, that's enough of that, guys. Let me know if you have any questions. Let me know if this is good. Hope you guys had a good train day. I'll talk to you guys tomorrow. Stay safe. Please don't drink and drive. It's not worth it. Your boy got a DUI many years ago, and it sucked. Have a good one, guys. If you learned something, share the show. If you didn't, well, I'll talk to you later. Bye.